Hello, I'm Azadeh Vazi, Head of Corporate Affairs at Intrum, and I'm here with our President and CEO, Andres Rubio. Hello, Andres. Thank you for joining us.
Hello, Azadeh. Welcome to Intrum, and thank you for having me today.
So Intrum's just announced its financial results for the fourth quarter and full year 2024. It's been a very busy and eventful year on many fronts. There seems to have been significant progress on the strategic plan and the move to capital light, and lots of news on the restructuring front. So looking at the strategic agenda, what are the most important developments in terms of strategic deliverables during the year?
When I look at 2024, it was an incredibly active year, but you always have to start going back to what was your plan and what kind of results you had against those plans and what kind of impact you have. So on the plan, starting in 23 in our Capital Markets Day, we had three key initiatives: become operationally more effective and efficient, become much more client service oriented, and become more capital light in our investing business. During 24, we've made significant progress on all fronts. On the operating side, you'll hear from me in a few minutes. I'm sure I'll talk when I talk about my the servicing business. We have dramatically improved our profitability. We have become more efficient. We've managed key drivers across our business in 20 markets. And we've rolled out, specifically Ophelos and soon to be INEO, new technological platforms that will allow us to be even more efficient and more effective in our operating platform. From a client service perspective, we had the second best quarter in the history of our servicing business. We have expanded our assets under management with third-party clients, and clients continue to come to us with a need for credit management services. So that is indicative of the strength of our franchise, but also the environment, and is actually a part of our focus over the last 2 years. Previously, we had the reverse focus. We had focused more on being a balance sheet investor as opposed to a servicer, a client service platform. We have now reversed that, and now we're really starting to see the fruits of that focus. And then third, on capital light, we began the year with the sale of a back book to Cerberus. We then also subsequently announced our capital partnership to govern our going forward investments with Cerberus, all of which are very important steps towards becoming more capital light, being able to grow our investing business without growing our balance sheet, and eventually becoming an investment manager. Now, to sum all that, that's all wonderful and that's all very business oriented. I also think we always have to go back, and you've heard me say this many, many times, to the why. To what kind of an impact do we have on our customers, on society, on the economy. And the thing that delights me every time, that actually motivates me every day when I wake up, is that during 24 we continued to help people. And during the year we helped almost 5 million people, just under 5 million consumers across Europe, become debt-free. These are individuals who have been previously excluded from financial society, who have fallen on difficult times, who we've helped manage through this difficult time, and now, as a result of having paid back their debt, they can reintegrate into financial society, get a bank account, get a credit card. It's an incredibly valuable service that we provide to society, to the sustainability of the financial system, and all while doing that, we still collect a tremendous amount for our clients. And that's really the privileged position we find ourselves in, Azadeh. And 2024 was a great example of progress on all those fronts.
So let's talk about financial results for the quarter. The servicing business in particular, there are some really impressive numbers there. And I'd like you to just take a moment to explain to us what is driving these positive results.
The positive results are driven by a need for our services, an increase in assets as a result of that need for our services that clients are bestowing upon us to collect on their behalf, and the focus that we've implemented as of 2023 and into 2024. It manifests itself in some significantly positive numbers. Absolute adjusted EBIT during the fourth quarter was at a growth level of 26% versus the prior year. Our margin during the quarter was at 30%. Last year was 23%. So we're not only making more money, we're actually making more money per unit of revenue. So we're becoming more efficient and we're delivering for our clients. Both of those are critical elements of us delivering better for our shareholders, us being more effective at what we do every day, and in the meantime, helping customers and delivering for clients.
Okay, I'd like to turn to investing now. Can you give us a bit more detail on performance and how collections have been impacted by the ongoing challenging macroeconomic environment?
Sure. The European macroeconomic environment, as was very much detailed in our European Consumer Payments Report, as well as our European Payment Report, indicates that SMEs, small and medium-sized enterprises, as well as consumers, are still under significant pressure. Despite the fact that recently there's been a little bit more confidence in the overall situation, we still have the cumulative impact of the last 2 or 3 years of inflation, and with wages not catching up. So the individual consumer, the vast majority of the individual consumers across Europe, are still in a very difficult situation. What that means is that collectability against unpaid claims becomes more difficult. People just don't have the money to repay their claims. With regard to our investing portfolio, it is large. We have lowered, as a result of preserving cash, lowered our investments recently. So our investment portfolio every year becomes slightly smaller and slightly older, which means it's more difficult to collect. Despite the macro headwind and this structural aging, the performance during the year and during the quarter was great. During the fourth quarter, we collected at 103% of our active forecast and 111% of our original forecast. And during the year, we were above 100% at around 101 of active forecast, and we were at 110 of original forecast. So this business continues to perform very strongly. It continues to demonstrate resilience despite the environment and also despite being smaller as a result of the back book sale. And during the year, and during the quarter, we also did invest about $500 million SEK and at around a 20% IRR. So we continue to, at least in a smaller scale for now, replenish our assets at a very high IRR, indicative of the overall environment. So the PI business, or investing business, had a very good quarter and finished off the year in a very good fashion.
You mentioned capital partners and Cerberus earlier. Can we speak more about that? So during the quarter, it looks like you've made significant progress towards capital light. Can you talk us through that progress?
Sure. In the beginning half of the year, we announced a capital partnership, an investment partnership with Cerberus. That is, they invest 70% to 80% of the capital. We invest 20 to 30%. Jointly approaching the market such that we can invest and grow our investing business without necessarily growing our balance sheet. Historically, we're a 100% proprietary balance sheet investor. For every unit of incremental investment, we had to incur a unit of incremental debt. Now we've created much more of an investment management business. That joint venture, as we announced in the third quarter, started off with 5 deals and about 150 million euros. We're now on to 12 deals and well closer to 250 million euros throughout the second half of last year. So that partnership has gotten off to a great start, and we expect to continue to grow that in 2025. The important part of this, as I said, is that it allows us to grow our investing business without growing our balance sheet. We do invest our share and get our investor IRR at, more recently, 18, 19, 20%. But in addition to that, on their capital, the partner's capital, we get fees, as well as we get servicing revenue on the entire perimeter. What it does is it really leverages all our capabilities to find assets, our capabilities to underwrite the investment of assets, and then our capabilities to service assets on behalf of our own capital, but more importantly on behalf of third-party capital, which will continue to grow, and we will make significantly greater profits as a result of growing that business, but without having to grow our balance sheet. And so that partnership is exactly one of the first steps, a very important first step towards eventually becoming a true, full-fledged consumer credit investment manager.
Thank you. Can we focus now on the subject of costs? So how is the cost reduction program going, and have you seen the impact yet, or begun to see the impact?
We have seen the impact. We have had, as many of you know, we have had discrete cost reduction programs in 23 and in 24, what we called Project Boost and then Project Fit, or Fit for Future. Those have yielded 1.3 billion SEK of run rate savings thus far, and we will continue to realize additional run rate savings during 2025. Those are discrete programs. What I'm really delighted about is as we look into 25, we look at the budget we've agreed with all the markets, the 20 markets and our 2 businesses, servicing and investing, what we see is a planned increase in revenues and a decrease in aggregate costs. So what that means is this improvement in our overall cost income ratio, and specifically in the servicing margin, will continue, but is now not in need of a discrete program to identify costs and reduce them. It's part of our ongoing business planning and business execution. So it's part of incorporating that improvement and that cost consciousness in our everyday management of the business. And that's what I'm actually very delighted with. It's yielded fruits. We've done some very discrete, targeted cost cutting. Now it's in the business. We have a continuous improvement culture, and it's filtered down into our 25 budget.
So now a different topic, but an important one. Can you give us a brief summary on how the recapitalization transaction is progressing, where we are and what to expect?
Sure. Last time I spoke to our internal employees, it was really just after December 31st. On that date, that is a very important date. That is the date that our Chapter 11 plan was confirmed by the U.S. court in Houston. With that, we have a successful and approved Chapter 11 plan. I'll remind you that for that plan, we had 100% of our banks and 82% of our bondholders voting in favor of that plan. And ultimately, the court saw fit to confirm the plan. We are now in a very important but final stage here in Sweden, where we initiated on January 8th we submitted on January 8th an application for a Swedish company reorganization. The court accepted that application on the same day. We have since then had a creditors meeting where creditors could come and obviously ask questions and air their views. The next big step will be sometime in March, there will be a creditors vote. And I'll remind you that all of the locked up creditors who have committed back last summer to supporting our plan and voted overwhelmingly 100% and 82% for Chapter 11, those same locked up investors have legally committed to voting in favor of the Swedish plan. So we're confident, although the Swedish court has to run through its process, we're confident that we will also emerge from this process with a confirmation of our restructuring plan. Why? Because it's good for all stakeholders. It's good for creditors, it's good for the company, it's good for our employees, it's good for our equity holders. The timing overall on the restructuring is once we complete the Swedish process, and hopefully we get a favorable ruling, we then need to complete some structural changes that are conditions precedent, and we would go effective. We suspect that will be within the first half of this year, likely to be the middle or end of the second quarter. So we've made some really great progress. We've hit some important milestones. We're at an important but final stage, and we see the finish line in sight. When we emerge, what we're going to emerge with is much more runway as a business to execute our plan, and with a capital structure that's aligned with our business plan, which again is better for all our stakeholders.
Thank you. So just finally, looking ahead to this year, it's 2025, what can we expect?
Listen, we will continue our path to profitability and becoming a more relevant servicer. Top line growth, external servicing revenue growth, better margin. We will continue scaling up our Cerberus joint venture and ultimately progressing towards a more capital-light investing business. And we will emerge from the recapitalization with a much better capital structure, which will allow us to really manage for the bottom line for our shareholders and also for the creditors, to repay the creditors over time. So we will have a aligned, as I said, capital structure to our business plan and have ample runway to execute on our core strategy, going all the way back to we can become more operationally efficient and effective, we can become more client-oriented, and we become more capital-light. If we do that, and we continue to play this critical role of sitting in between credit providers and consumers who have fallen on difficult times, collecting for the credit providers, but helping consumers navigate a difficult time and helping them reintegrate in society, I think the future is actually quite bright for Intrum.
Thank you, Andres. That's all my questions now. Thank you so much for taking the time.
Thank you all. And also, one last thing, I would like to just thank all of the employees at Intrum and frankly all our stakeholders. We've, during this process, 24, particularly the recapitalization process, external stakeholders have showed an overwhelming level of support. Our shareholders have continually expressed support. Our creditors have manifested their support in the form of formal support of our recapitalization steps, Chapter 11 and now Swedish. Our employees have done an amazing job staying focused in the local markets. Our clients have stood by us. We haven't lost any clients during this process. And our customers continue to benefit from our services and continue to turn to us for solutions for their problems, and we are able to continue delivering. So I think that when I look back at 24, it was a very eventful year, but thanks to everyone's efforts internally and thanks to everyone's support externally, we navigated it quite well, and we have brighter skies ahead.